Namaskar everyone, and a very, very warm welcome to the 19th International Tax Conference, which is brought to you by ASSOCHAM India. We are going to now begin with the inaugural session, and I'll request all of you to please put your hands together and join me in welcoming, first of all, our chief guest for this session, Shri Vivek Agrawal, Additional Secretary, Department of Revenue with the Ministry of Finance. I'll request all of you to please put your hands together as I welcome him. And we also welcome Mr. Milind Kothari, Chairman of the National Council on International Taxes, ASSOCHAM, Mr. Rahul Garg, Chairman, National Council on Direct Taxes, ASSOCHAM, and Mr. Rakesh Nangia, Co-Chairman of the National Council on International Taxes with ASSOCHAM. I'll request our dignitaries to please light the ceremonial lamp and inaugurate our today's program. My apologies, we'll just take a few minutes. Our dignitaries are joining us. They are here at the venue. In just a few moments from now, they will be joining us, and that's when we begin this session. Please put your hands together and join me in welcoming our chief guest, Mr. Vivek Agrawal, Additional Secretary, Department of Revenue, Ministry of Finance. We are also being joined by Mr. Milind Kothari, Chairman, National Council on International Taxes, ASSOCHAM, Mr. Rahul Garg, Chairman, National Council on Direct Taxes, ASSOCHAM, and Mr. Rakesh Nangia, Co-Chairman of the National Council on International Taxes, ASSOCHAM once again. I'll request our distinguished speakers and guests to please light the ceremonial lamp. And as we do at the beginning of all of our auspicious occasions, light the ceremonial lamp to seek the blessings of the Almighty, thank Him for a new day of learning, and begin our today's program. I'll also request Mr. Kamlesh Varshni, Joint Secretary, Ministry of Finance, to please join us for the ceremony. Request the dignitaries to please join us on the dais. And with that, our today's program, ladies and gentlemen, is now officially inaugurated. We'd also like to extend our heartiest gratitude and extend a floral welcome to Shri Vivek Agrawal, the Honorable Additional Secretary, Department of Revenue. I'll request Mr. Milind Kothari to kindly present a plant sapling to Shri Vivek Agrawal and welcome him on behalf of all of us here at ASSOCHAM. And without any further ado, I request Mr. Rahul Garg to now give the welcome address.
Good morning, friends. Hope you are able to hear me and also see me behind this towering dais. My name is Rahul Garg, and I have duty and responsibility to lead the ASSOCHAM National Council on Direct Taxes. And I must say that with the help of each one of you, the council has been doing a great job. And today, I especially want to welcome, along with you all, our chief guest, Shri Vivek Agrawal, the Additional Secretary, Department of Revenue, Government of India, who has played as a senior bureaucrat multiple roles in very constructive making of country, making of things that we experience every day. But I can just tell you an interaction recently we had on the tax policy matter, where many of you contributed as to what are the tax policy related issue on litigation. And I must tell you that each one of you who contributed to this, I had privilege to have that interaction with Shri Vivek Agrawal, leading that meeting, which was initially told us to be a round table. And when we went into the meeting, this was for a half a day or so, I found that turned out to be really a workshop. And I found in Vivek One very clear thing, he is led by purpose. He has an obsession for leading it by purpose. I also found him very, very open-minded and inviting the ideas and new ideas, and his processor is so fast, he would quickly say, this would work, this would not work, and that's the kind of experience he brings to the table. And thank you very much, sir, for being with us today. You are joined with Sri Milind Kothari and Sri Rakesh Nagya as a part of this inaugural session. So I welcome them too as a part of the ASSOCHAM office bearer of the Tax Committee and International Tax Committee, and each one of you to this event. I would also say that ASSOCHAM as an organization has performed the role of acting as a bridge. And to Vivek sir, I just want to point out whether it was a matter on the VSV, whether it was a matter on the GST, whether it was a matter on the various amendments from time to time that take place in TDS, whether there are issues concerning the new age businesses, whether it is digital, whether it is virtual digital assets, etc. The members have come forward and created the framework for us to interact with the Department of Revenue at various levels for various things. So I thank each one of you to give us an opportunity to create that honest and fair dialogue between us and the government. I would also say that the chamber recognizes the focus that the government has on making the businesses competitive, creating ease of doing businesses, bringing certainty in the matters that concern the businesses, and also the overall growth of the country, and the citizen welfare. In all this, we understand that tax plays a big role. In that big role that the tax plays, the responsibility each one of our members take is regarded very high amongst each one of them. In one of the events a couple of months back, Sri Varshney was there, and he spoke about how the tax department is looking at the conduct and the behavior of the businesses and how they are collaboratively moving forward. We took his permission to share that video of his for 10 minutes with all the members of ASSOCHAM at the CFO and the CEO's level, and we got unsolicited feedback. That's the kind of interaction and honest feedback the members look forward. So Sir Vivek sir, we are looking forward another good day and interaction with you, and with your rich experience and also on the policy understanding. We feel that today's interaction with this group, which represents the businesses, which represents the multinational businesses, the domestic businesses, the manufacturing businesses, the services businesses, across the sector, whether it is defense, whether it is railways, whether it is infrastructure, whether it is manufacturing, and also the investors, your address today would act as a lighthouse for guidance to each one of us. I would just point out 2-3 things that the recognizing the efforts that the government is making with the special task force and committees created for ease of doing business. I'll illustrate just by giving 2 examples that there is a reporting requirement and there is a protocol to be followed, and the rules and regulations are to be followed regarding related party transactions. And related party transactions are seen by the businesses and the related party and the regulators in a certain manner. Today, Vivek sir, I can tell you, just within the fiscal legislation, there are half a dozen definition of the related party. Different definition for custom, different definition within the Income Tax Act for the transfer pricing for another related party, within the GST, within the RBI, within the corporate law. There are different definitions. There are half a dozen within the fiscal legislation, the definition of related party. In each of those legislation, the measurement criteria for a fair related party transaction is different. At times it says it's a fair market value, at times it says it's a derivative from the balance sheet, at times it says it's based on the recent transaction, at times it says it's based on the last 6 months reports. There are different criteria for measurement of this. And not only that, in each of these legislation, there are different ways to authenticate or to evidence that. In some legislation, it requires a merchant banker's approval. In some, it requires a CA's approval. In some, it requires a certification from the auditor. In some, it requires the certification of the last transaction. In some, it requires even the certification if it is a matter of the advanced pricing mechanism which SSC has gone through. So I would say that there are quite a few things which straddle across the laws, which straddle across perhaps various departments of the government, where we think that it is not singular department being responsible for this, and therefore these are not getting addressed in certain manner where it could create harmonization and ease. Another example I'll give you, there are various approvals which are given where Ministry of Finance is the final ministry to sign it off, and I'll illustrate two of them, which create the uncertainty in terms of the costing of taxes that people need to put, and how we lose the business and how we lose the money because of that. You know it better than me. When people bid, and I'll give you one classic example of the defense procurement. In the defense procurement now, including all taxes when you need to bid, and you have a customs notification which says that it expires sometime in 2024. Now, when you bid today for defense contract which will run for 10 years, which will then maybe extended for another 10 years, how would you then treat, what would be your cost of taxes in servicing those contracts? Mostly people would consider this is a notice which is notification which is only having limited life, and therefore we don't know whether it will be extended or not extended, and therefore they would budget some taxes on some basis, which may be higher or lower than the actual taxes which may befall on such transactions. It creates one, uncertainty for the businesses to take positions on taxes, and second, it also results in the bids being higher than it could be if there was a certainty in this matter. Another example I'll give you, in quite a lot of the business contracts with the defense, there is a tax concession given or a tax treatment given which says that if the contracts pertain to the defense of the security which is so approved by the Ministry of Defense, then the taxpayer shall be entitled to a certain tax advantage. We have seen number of cases where the Ministry of Defense approves that yes, it is for the purpose of the national security, but Ministry of Finance still has not been able to process that, and we don't know if there is a guideline between this and that between the ministries to progress it. So these two examples I give not because of any other reason, but for the reason to, one, highlight that interdepartmental harmonization, there are lots of areas to cover, and we as chamber can bring in more aspects, just like I brought one for the related party transactions. And there are aspects of where virtually a single window kind of a thing through Ministry of Finance should happen, but we do find that there is some lag or there is some black box in between which is not transparent to businesses, and that increases the businesses' uncertainty and therefore cost of the bids and therefore cost to the exchequer in terms of procurements that are made. Two more points I will make here. One is regarding the significant effort and reform change that we made for the IBC code. The tax issues regarding IBC code, and particularly the income tax issues and the past tax issues, are getting addressed to some extent, but it still requires much more deeper examination, because the person who under such bids ultimately gets an undertaking or gets the businesses under IBC, he gets it, he needs to get it on a clean slate basis. Now, if there are ifs and buts as to what happens to the past legislation, how would the past legislation now haunt the new owner of the business, he would not be able to bid it in an appropriate manner. He would back away from bidding, and even if he bids, he would bid it in a manner that it pads in a lot of contingency on that, and therefore the recoveries would go down and are going down. And we see that, but for the clarity, the recoveries from the IBC process could increase. The second thing I would point out, that in terms of the growth in the businesses, manufacturing definitely is a sector where through PLI and other incentives there is a lot of attention. But service sector, and particularly in India, the talent that is available, which is differentiated from other countries, the service sector is a large employment generation sector. And today, at the senior level, when we see the multinational companies have the Indian CEOs overseas, same multinational companies, the Indian companies, they have the CEOs kind of material within India who want to be working from India, taking care of the regional role of Southeast Asia or Asia and Europe or Asia and Eurasia or whatever people want to do. Today, I can point out that this is the legislation that we have in the Income Tax Act, which says that if people are managing the businesses from sitting in India, then the countries in which they manage the businesses, under certain circumstances, the profits of those countries could become taxable in India. And loosely we call it the place of effective management regulations under the Income Tax Act. I would say that as it is, there has been a lot of water which has flown under this. There are circulars which have been issued to clarify the positions on this. But today I can tell you from experience of the interactions with the members that people don't want to create the regional roles to up the value chain game in India, to increase their manpower in India because of apprehension on this. So I would encourage that at least for the purpose of this regulation, if there are regional roles being performed by the people sitting in India, there should be a specifically carved out for this. With these two additional examples, I will put a halt to my conversation today with you and would hand it over back to the organizer. Thank you very much for patient listening.
Well, thank you very much, Mr. Garg, for that very comprehensive address. I'll now request Mr. Milan Kothari to kindly set the context and the theme for our today's program. Please welcome him, everyone.
So thank you, Rahul, for opening remarks. And Honorable Chief Guest, Mr. Vivek, thank you for coming today and gracing us for this conference. Mr. Kamlesh Vasni, Mr. Rajat Bansal, all of you, very warm welcome to everyone. And eminent speakers today and distinguished guests and members of ASSOCHAM. Warm welcome to everyone for this conference. I think it's great to see a full house after 3 years. It's been a privilege to be able to host this conference in the capital city of India. A lot has changed in the last 3 years after a long hiatus of 3 years of 2 years of pandemic and thereafter this conference that we are having in person. Number one, which I think as I would like to highlight is that India is now entering a new era in my view, and I'm personally so glad to see this happening that for once every year or every, how would I say, every time we hear this statistics about how the revenue growth is actually exceeding the target that has been set. I think I've not seen this in my lifetime of almost 3 decades of this consistent revenue growth that India is witnessing in both direct and indirect taxes, which is really heartening. I think it's India's time has come as a developed country in the making. So I think that bodes very well for generations to come. How is that happening? There are multiple factors that go into it. Of course, we were just discussing a while ago that what sets pace is a fast-growing economy at the core, which is actually contributing to revenue growth. That's number one. But there are important aspects apart from that. There is an increased tax compliance, which we also see. There is an efficacy of the tax administration that also has a very important role to play. And I think we are almost getting there as a stable tax regime. I think these are the key factors that contribute to the growth of tax revenue. And I think I'm very glad that we are embarking on a very prosperous journey for our country going forward. The next, of course, is as a country digitally leapfrogs, and I think India is at the forefront of that. We have the largest digital absorption in the world. We are one of the largest and the fastest growing market for digital consumers in the world. I think there are some great cornerstones of our digital journey. And I think more than that, I think the government has been the core of driving this digital transformation for our country. And I think for once I can admit that government is actually ahead of the private sector when it comes to digital information. And we see that in the data that government now has. And we were just discussing with Mr. Agarwal just a few minutes ago that the amount of information now available with the government is so overwhelming. It possibly gives anyone a pulse of what's happening in the economy much better than any other statistics that you otherwise would find in public domain. I think these are the cornerstones of how the digital transformation is taking place in our country, and I think that's a big one in my view, apart from the tax revenue growth that we are seeing as a country. The last one is, of course, if you focus back on the international tax regime, I think we remain in some kind of a stress situation even as of now. Digital commerce itself was something as an issue of taxation that was dodging the governments how to collect fair share of revenue as opposed to the economic activity in a country. That has not been resolved. But on top of it, now we have the Russia-Ukraine war, which has possibly, I would have said, changed the economic parameters of how countries will operate permanently going forward. And I see possibly that multilateral taxation is going to be under great amount of stress going forward. And bilateral taxation resolution possibly will see a much faster growth happening to the detriment of many countries in the process. Weaker economies do not have bargaining power. They possibly suffer the most. And we don't need to look far beyond. If you look at our neighbors' plight, whether it is Pakistan, Sri Lanka, or Nepal, it says it all, how economies are shaping up to the new world and the challenges. I think we are fortunate as a country that our economy is possibly now the 5th largest economy in the world and slated to become the 3rd largest in a few, I would say maybe a decade and so. So I think that's the Indian story. On every front, India is possibly as a shining economy for the world. Coming to today's conference, there are some very interesting sessions. First will be led by Hemal. He was going to be taking the section 194R with Mr. Kamlesh to give his expert comments. That's going to be a very interesting session. And then we have Mr. Sachin Garg, who is going to take us through the emerging international tax issues as a roundup. I think that's also something needed after 3 years of time to just get a cap on what's happening. But apart from that, we have 3 very interesting subjects. One is, of course, the FTAs, the emerging story on FTAs. Honorable Minister of Commerce, Mr. Piyush Goyal is driving this large change on the trade part, and I think it will be a very interesting session also. Gift cities, which is Honorable Prime Minister's, favorite subject, I would say, and possibly ushering us into a financial economy going forward. That's the next subject, which is also going to be very interesting. And lastly, a subject that possibly we would have not heard 3 years ago, which has acquired great relevance, is hybrid working. And Vikas is going to take us through that. So, our interesting day today, many experts to listen to. I'm looking forward to very interactive sessions going forward. And with these comments, I would request Mr. Agarwal to take over and give us the inaugural address, Mr. Agarwal. Thank you.
Mr. Rahul Garg, Mr. Milind Kothari, Mr. Rakesh Nangia, all the office bearers of ASSOCHAM, my colleagues from the Department of Revenue, Mr. Ramesh, former chairman of CBIC, all the dignitaries and invitees, ladies and gentlemen. So, can we have a perfect system of taxation for an economy is a question that none of us can answer in yes. So, accepting the imperfections of a taxation system, one can start looking at how we can implement a system which is more transparent, which has less subjectivity in implementation and in administration, which promotes ease of doing business. As a recent report said, it does not lead to jailing for doing business for people who are actually taxpayers. And it also leads to growth and development of our country's economy. So this is all what we can look forward to. So when we look at a taxation system, rather than looking at a perfect system, we are looking at a system which is actually a progressive system, which helps the economy and businesses to grow. So with this, I would like to say that in the recent times, as Mr. Kothari was pointing out, that we have seen a very good and robust growth in the taxation collection, both on the direct taxes side and on the indirect taxes side. But it has also led to thinking in the government that while we are implementing the reform, the faceless system has come in the direct taxes system. We have a data-based and a data-oriented, IT-enabled GST system that has been rolled out in the country successfully. Now can we look at ease of doing business and decriminalization of tax laws as a priority? I can tell you that this is now the clarion call given by Honorable Prime Minister and the Honorable Finance Minister, and this is a task given to all of us, that we have to go in detail and make sure that we look at ease of doing business as our priority and we take steps to the best of our abilities. Recently, when we started working on ease of doing business and decriminalization, as a taxman, when we started discussing, the first reaction would be that this is a deterrence that is required in any tax collection mechanism. So any dilution of criminal provisions would actually lead to impact on the tax collection. So this was the beginning of the debate that happened. But when we started going into detail, we found that there are criminal provisions in the Income Tax Act, in the Customs Act, and in the GST Act, which are compoundable. But what is the level of compounding that is happening, and what is the discretion that is being exercised by officers? Can we look at that and make it more simpler? So this was one issue that was debated. The second issue was we have threshold limits for criminalization or prosecution of a particular tax evasion setup. So there are thresholds of certain amount like 25 lakhs of tax evasion in income tax. There is a level of 1 crore in GST. There is a certain level, say 20 lakhs for customs misdeclaration of baggage or other things that are coming through the ports. So there were threshold limits which we thought can be relooked at. And the third point was the provisions itself, whether they are redundant or we are having overlapping provisions with other acts. So when we went in detail, we could come to a consensus that the compounding provisions have to be made simpler, they have to be made more objective, and discretion has to be reduced. We can increase the thresholds for declaring a particular act as a crime, and we can look at removing those sections in these acts which are actually duplicate sections. We have similar sections in the Indian Penal Code, very small acts like obstructing an officer while acting to enforce, or not producing the documents while summons were issued. So all those things were looked at, and I'm happy to report that on all three fronts, under the Income Tax Act, under the Customs Act, and under the GST Act, a lot of progress has been made, and you would see as time goes by that changes will come in. We are looking at raising the threshold limits in GST. We are looking at removing those provisions which are overlapping with the IPC, so that those provisions become simpler as the GST gets rolled out. The compounding provisions in GST are prohibitive. I mean, the compounding currently requires 50% to 150% of compounding charges or compounding fees, which is impossible for anybody to pay. That's why there has been zero compounding in India till now for all cases which are filed under GST. So that is being relooked at so that it becomes affordable and compounding becomes a better or a first choice for a taxpayer. Similarly, under the income tax law, you would have seen the new circular that has been issued on compounding. Under the customs also, thresholds have been raised and a new circular on compounding has come in. So I was just pointing out that this is a major focus area to create a system of taxation which is more palatable, which is looking at growth, which is looking at supporting the businesses. And this is now becoming a reality. And as we come to the finance bill of 23, you would see a lot of changes happening on ease of doing business as well as on decriminalization of tax laws. The other point that has always been made is the reduction of compliance burden for businesses. So we have seen that there are separate numbers for each kind of application. If you have to go for a GST return filing, you have to go for a Ministry of Corporate Affairs return filing, you have to go for a income tax return filing, you have to go for ESI return filing, EPF return filing. So everywhere you have a separate identity, a separate number, a separate return to be filed, a lot of data to be filled in. So there is a serious move to have a single business identity, and that business identity can be used to go on a single portal to file different returns which are required for a particular business. So we are working very hard on this particular aspect also, so that businesses don't have to really work very hard for compliances, and compliances can be done in a way that the system becomes more and more simpler for you to follow. The third important point which was also raised is the interdepartmental coordination. Rahul had raised this point that there is one department which is declaring a certain tax exemption or a certain incentive for a particular activity, and the revenue department is implementing, and there are many compliance issues. There are also issues of data sharing. There are also issues of a data silo which has been created over a period of time, which has resulted in lack of planning at the national level from the government side also, and also lack of planning for the businesses as well, so far as their activity is panning out. So there is, again, we are now working very hard to break these silos. First, breaking the silos within the revenue department, between the direct taxes and indirect taxes, and then breaking these silos with other departments, so that the data that is getting collected either on the GST or on the income tax or on the customs, that is flowing freely between the departments, between the agencies, amongst the various users, and it also results in various spin-offs for businesses as well. Like for the GST data on sales or on invoices can actually be a data for the bankers to use that data for lending. It can also be a data for discounting of bills that are being issued by a supplier to a buyer, because there is always a credit line that is given in any transaction, and that credit line can be discounted, and this can be a major market. So we are working closely with aggregators where the consent-based data sharing policy is being framed, and that data can be shared with the aggregators, and that can have a lot of spin-offs so far as the financial sector is concerned. Similarly, the data being shared with different departments, the aggregated data, so that that data can be used for planning for their activity as well as for the national economic planning. That also is being now, we are working on it. So this data sharing mechanism, data portal at one place, the data transmission to various users, including the private sector players, for further monetization of their data. So that is under active consideration and active implementation, and I see as we go forward, we will have a lot of results that would come in. Another initiative that Department of Revenue has taken, which Rahul was alluding to, is the role of a unit which can think beyond the direct taxes mandate or indirect taxes mandate, which can look at a common mandate and come out with policy recommendations which are reformists in nature. So we are now having detailed stakeholder discussions on litigation management, how we can reduce litigation, how the current backlog of appeals with the commissioners in the income tax side can be reduced. Can we go on a mission mode to look at clearing up our backlog and also making sure that the recourse to litigation gets reduced, people get redressal at an appropriate forum, at an appropriate stage. We are looking at transfer pricing issues in detail, so that if a reform can be introduced, that gets built in. We are looking at issues of import of services. In fact, we had a detailed analysis on import of services, OIDR, and then we have given recommendations to the CBIC for both for tax compliance as well as reforming the system, so that the ease of doing business is taken care of, as well as if there is any evasion of tax, that gets plugged in. So a lot of initiative has been taken now on the policy side, which is beyond the taxman's general thinking. So normally the policy has been formulated at the level of the boards Now it is going beyond the boards, and it is, of course, both the boards are represented, but there is also a huge stakeholder consultation, and it is going on parallelly. It is not dependent on the finance bill coming up. Normally, the stakeholder consultations would take place just before the budget, and the results would be declared in the budget. But now we are doing it as a year-long exercise. So if there is any issue that gets discussed, that gets debated throughout the process, and the process gets culminated before even the discussions on the budget starts. So that process has been initiated, and I wish and hope that this will lead to very good results. There is a constant mechanism which also works on different issues that have been raised today, like the IBC process, what can be the taxation regime, the differences in definitions of particular terms amongst various enactments, tax enactments, the issues of inconsistencies within the legal regimes. So this is again a consistent activity, this is a continuous activity, and as I said, we are looking forward to having more stakeholder consultations, to having suggestions, and then of course improving the entire system. As we move forward, the role of data, the role of technology, the role of sharing of data, the system of informing the taxpayer about the data that we already have, like we have introduced in the income tax side where AIS has been introduced, so that at least the taxpayer knows that this is what the government already has. So there is no issue of any inconsistency in filing returns. So that is also now being actively done on all sides, and more and more data that is with us is getting shared. Another issue that is important is the issue of suspicious transactions that get reported through the FIU, and that is part of the FATF mandate. We are also trying to ensure that the data that is being shared through STRs or cash transaction reports that come in is kept confidential as a data, and is used in a very circumscribed way, not in a very bulk manner that the data gets shared to authorities and then people get harassed. So now the data sharing has become a way where the analysis is done, and after the analysis, if it is found that it is leading to some evasion, either on the direct taxes side or on the indirect taxes side, only then it is shared. So automatic sharing of data is not there, and a lot of checks and balances are being put in place so that there is no undue harassment to the taxpayer. Overall, I would like to reiterate that the emphasis of this government is to use taxation systems as a tool for growth, not as a hindrance to growth. The entire focus is that the collection of tax should become as smooth and as objective as possible, based on technology, with least intrusive behavior, with least subjectivity in implementation. So wherever there are issues, of course there are issues, as I started in the beginning, that we are not perfect as such, and being perfect or trying to be perfect would always be an objective, an utopian idea which we keep on following. But the steps taken are towards that direction, so that we reach a system which is conducive to the business and which is conducive to country's growth. I would again like to say that all of you are partners in this entire setup. All of you are partners in the policy formation. I would encourage all of you to speak out, to give your suggestions, to participate in the stakeholders meetings that we are continuously holding. Give your input, be aggressive about it. There is no need to be shy about saying the right thing. We are there to hear, we are there to implement the right thing. There is no mandate to feel bad about any criticism. We are open to criticism. We are open to complaints if there are any in our implementation. But we are also ready to reform. We are also ready to change. We are also ready to make sure that Honorable Prime Minister's mandate and Honorable Finance Minister's mandate of creating ease of doing business and looking at decriminalization as we move forward. I really welcome all of you to be our partners. Thank you. Jai Hind.
Vik sir, thank you very much for your sharing. Uh, I would just put for your consideration that for stakeholder consultations, which happen periodically on identified subjects, if you wish to consider an open portal where people can submit their consultation ideas, and at the back end from technology, these can be classified. Thank you so much.
Well, thank you once again, Mr. Agrawal, for sparing some of your most valuable time, joining us here today and sharing with us those insights. And we request you to kindly now officially release the knowledge report. And I'll also request other dignitaries to release this report on emerging tax trends, a compendium. And we sure have some time for question and answers. If there are any questions in the audience, please feel free to raise your hand, introduce yourself, and let us know what your question is. Any observations, any questions? Yes, please. We'll just get a mic to you. If you may just raise your hand, it will be easier for our team to identify. Thank you.
Sir, thank you for your good words. Just one thing on ease of doing business. For 194R, when the equalization levy came, we said that this is the most complex, but I can tell you 194R is giving a good competition to equalization levy. And sir, you have been giving these, circulars and all. One of the circular latest which has come by saying that, if it is not possible in the dealer conference, some of the expenses, then you can disallow. And nothing, no penalties and all. Can this be extended to some other, because this is a very complex, whether something is benefit to the business associates is very difficult to, at times identify. So can this be extended to other, areas where the business is not in a position to really say whether it is a benefit or not? Once the business disallows this expense, then it will be great for ease of doing business.
Actually, it's a new provision that has come into force, and of course, when something new comes in, then complications and understanding issues are always there. I suppose there's a session on this particular topic in the conference, and my colleague is here, who is an expert on taxation matters. So probably you have a discussion in that session, and whatever suggestions are coming out or whatever formulations come out, I'll request the organizers to send it to us. And we look towards it, and we'll see how more simplification can be added to the whole process. But it is, in fact, I always joke about it. I passed the Income Tax Act as a subject in BCom as a student. Then I passed the same act, as a subject as a student of company secretary, as a CS. Then I passed the same subject as a student of law in my LLB. Then in my civil services, commerce was my subject. So again, I passed the Income Tax Act there. But after doing Income Tax Act, writing the exam for 4 times, I still get confused when I go through C, C, D, D, E, E, F, F, G, H, Z, 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 B. So we are, as I said in the beginning, looking at a perfect system. We are still slightly away, but yes, there are issues. This is a new provision, and you are having a session on it. You please have a discussion in detail and bring out all the suggestions. We'll look at it.
Thank you, sir. Thank you.
Well, thank you. Yes, we'll get you a mic, please. First to the lady, if you could just give it to the lady on the second table. Oh, sir, please go ahead. We'll just get you one.
Professor Quatra of OP Jindal Global University. So as an academic, I'd like to ask a few questions to you, very important questions now. First thing is very enlightening today to know what directions government is going on. Super, I must compliment the initiatives that you have taken of the almost all most important policy matters, which I share with my students now. Coming first to interdepartmental coordination, super. As Dr. Shom's committee recommended very strongly. First question is, are you thinking of clubbing both the boards, CBDT and CBIC? Very important recommendations which Mr. Shom recommended is in this report now, number one. Regarding your decriminalization and the ease of doing business now. Regarding decriminalization, of course, good beginning was made in the company law. Good to hear in the direct taxes also you're bringing, Apart from bringing out certain offenses from this prosecution provisions, this is what you did in company law. Are you thinking of eliminating all the provisions of prosecutions from income tax law? And particularly when I find there are certain provisions to provide for mandatory imprisonment now. We've never seen in any country in the world now, where even judge doesn't have a discretion to leave a person now, based on mens rea. Recently you had a guidelines on the GST on mens rea now. But the judge, as of today's provisions, please consider these provisions now and think of even removing those provisions now. Ease of doing business, you're my partner, as you said just now, you're a partner, we are your partners now. But big actions are required at the earliest by the department so we can move forward and do many things now. One more thing I'll have you, sir. I'll come back again. I think let me make one.
So in fact, merging the two boards is not something that I see it possible in the near future. These are two very strong structures with different culture, with a different training, with a different requirement of taxation system. Because if you see the customs and the erstwhile central excise and now GST, this is a system which is, it's a uniform service at the lower ranks. There is a enforcement mechanism, they have powers to arrest, they are kind of the entire mechanism of enforcement and training is absolutely different. Under the income tax side, the criminal prosecution, arrest, these are a rare occurrence. They are not there in the system. They are more on the adjudication aspect, and they go into detail about the escaping entries, escaping income, and they go into detail of audits, etc. So the requirement and the training that is there for specialized officers working in the two setups is quite different. And of course, there was a committee recommendation, but I don't think this is immediately under consideration. So far as decriminalization is concerned, the point is valid. In fact, under the Income Tax Act now, there are only two sections where compounding is not allowed. Under section 275, that is, one is when during the search, if any prohibitory order is issued, like a locker is seized or sealed, or some premises is sealed, you open that up, only then it's a criminal offense. And secondly, if there is a reluctance or non-submission of documents or papers while the raid is actually happening or the search is actually happening, these are the only two provisions which are not decriminalized. Under all the other provisions of Income Tax Act, they are all compoundable. And the fees have been rationalized. Now, if you've seen, there's a 16th of September circular where the fees has been brought down, the discretion of officers have been reduced, and I had seen the data out of 12,000 odd prosecutions launched in last 5 years on the direct taxes side, about 9,800 got compounded. So more than 80% were already getting compounded, and now with this coming in, this process of decriminalization on the direct taxes side is actually a reality. On the indirect taxes side, customs is a different kind of a mechanism. Customs is not only a tax law, actually it's an enforcement mechanism. Because in customs, the seizures are on illegal arms, on drugs, on fake currency notes, etc. So that is an inter-border movement that customs controls. So customs inherently requires a criminal arm, because otherwise they don't have a prosecution arm. They are uniformed service, they cannot implement it. They're like a border police in many ways. So, but in the customs also, there has been an attempt to raise the threshold levels. From 20 lakh, we've raised it to 50 lakhs for illegal or misdeclaration of goods. The threshold for other evasion is also raised from 1 crore to 2 crore. Compounding has been made simpler, because earlier the compounding, the officer who was to compound had to also say that the offender has actually made a complete disclosure of the information. So that was to be recorded by the officer, the satisfaction of the officer. And that was an inhibiting factor. So under the customs, out of those 2,400 odd prosecutions that were launched in last 5 years, only 76 could be compounded. Rest went into prosecution. So this data was looked at, and now a new circular has been issued in August, which simplifies the process of compounding under the customs. In GST, the law is even slightly more complex. Actually, GST has a legacy. It has the legacy of the service tax on the one side, excise and VAT on the other side. So GST, since it was implemented, it was a new act and a new law, so the prosecution was a very important part of the GST law. So from 1 to 2 crores, there was a prosecution discretion to the officer, but it was a bailable, non-cognizable offense. 2 to 5, it is cognizable, bailable, but 5 above is a non-bailable offense. So again, if you see the data at the national level, there are more offenses registered which are 5 crores plus, very few less than 5 crores, and 1 to 2 crores were almost nil. So now we are relooking at, of course GST is a slightly longer process because we have to go to the GST Council and then we will go to the legislature. But that process has been initiated to simplify the GST prosecution provisions also, so that they become more business friendly. So there is a serious attempt on looking at the provisions on decriminalization, and there will be a result that will come out. In fact, it is already, as I said, you must have noticed the new circulars, the new directions. So they are flowing in now.
We'll just have one final question before we close it. Yes, please.
Hello, my name is Sana Zera. First, I would really like to thank you for sharing insights for some of the great initiatives that we are planning for ease of doing business. So one of the things that you mentioned is reduction of compliance burden. I would really want to understand that, as you said, there are multiple return filings under direct tax, then we have GST filing, then also under PF filings are there. So what are the plans, how we are going to make it more simpler or bring all these filings under one portal? Thank you.
So we are working with the DPIIT, the Department of Promotion for Industries and Trade, where they have a single portal. They have already launched a single portal for various compliances and services with the government. So as a phase 1, we are now trying to create a system where on the PAN-based identity of a business, you could go on that single portal, and on that single portal, you can file returns for different purposes. You don't have to go to different portals. That's the first step. But the second step would be that if you fill an information in a particular form in that portal, that should get auto-filled to other forms that are required. So your requirement to fill in the information again and again for different purposes, for different compliances should go away. And the third step would be the sharing of data also. Like for an income tax return, you have now a pre-filled return also. So whatever transactions are with us, we try to share it with the taxpayer. Similarly, we will try to create a module where the information with the departments which are pertaining to you gets shared with you, and that information can be pre-filled through a drop-down menu. So at least the process of filing returns will become simpler, and the data management of the data silos that are there between different departments and different agencies that will slowly start breaking down, and the data will get collated under one system. So this process has started. In fact, I was given 15 days time to give a report on the single business identity. The challenge was the entity and the unit. So one entity may have various units. Entity, of course, you can define a natural person or a legal person. But then the units can be a factory establishment, or can be an office, can be a different establishment, can be a store or a warehouse. So that process we are working on, so that once we create that mechanism, that becomes implementable all across, rather than having, so we will be doing it in a phased manner. And hopefully with the business process re-engineering on one side and the use of technology on the other side, we'll be able to deliver.
Well, thank you. And with that, we've almost come to an end of the first inaugural session. We'd once again like to extend our sincerest gratitude to Shri Vivek Agrawal for joining us today. I'm going to request Mr. Rahul Garg to present a little memento on behalf of all of us here at ASSOCHAM to Shri Vivek Agrawal, and thank him with this little token of our appreciation. And I now request Mr. Rakesh Nangia to give the final remarks and also propose a formal vote of thanks.
Good morning, everyone. It is indeed my pleasure and privilege to be part of this gathering of learned and distinguished guests. So, on behalf of ASSOCHAM, I would like to express my deepest appreciation and utmost gratitude, and to be a chief guest, Mr. Vivek Agrawal, Additional Secretary, Department of Revenue, Ministry of Finance. Along with other guests from the department, I see Mr. Kamlesh Ashe. Thank you so much for coming here, sir. And I had a number of occasions to interact with you and thoroughly enjoyed interacting with you. And sir, thank you for sharing your views and giving the insight and awareness. So we are deeply honored to have you here. So before I end up, I have just one thing to make a request to you. In the decriminalization notice, one small thing that may be considered. It is only applicable for the compounding application made post 16 September. Can this be relooked? Why not the pending applications? Once the government has taken a decision, let that benefit can be availed by those people if they fall under that scheme. Can we look into that, sir? This is a humble request, and we'll request ASSOCHAM to formally put it in writing also, sir. So friends, as we navigate through these challenging times, never faced since a century, there have been a lot of learnings. The life has been redefined and the rules rewritten, and whether it is personal or whether it is official. We have this unique opportunity to use this crisis to do things differently and build back economies which are sustainable, resilient, and inclusive. And friends, let's remember that as a message for everybody. Taxation plays a very important role in sustainable development, and developing countries like India, where there is always a serious challenge to build up the tax capacities to raise more revenue to fund for the high commitment of the government for the social sector. Tax is the biggest contributor to the government kitty, and it is the backbone of government resources. In fact, very well said, taxes are the lifeblood of government, and no taxpayer should be permitted to escape the payment of his just share of his burden of contribution to the government exchequer. Simultaneously, the government should also address the expectation of the corporates, and lately we have seen a battery of steps, I'm going to just run it over, taken by the government to adjust and align to the needs of the present times and the needs of the businesses. The rules of the financial prudence will be rewritten for some time, and there will be a compromise on government expenditure, which is a need of the hour. Some recent steps, mind-boggling steps taken by the government I'm repeating the biggest step taken by the government, which I can recall it in previous number of years, is this decriminalization of the act, widening of the landscape of compounding, which is there, clarifying on the streamlining of the faceless part, guidelines, clarification of 194R. These are a quick fix solution which has come by the government. Friends, let's remember one thing. India is on a very high growth trajectory. Your net tax collection is up by 23%. Your advanced tax collection is up by 17% in this low period of first 6 months. And 93% of return getting processed. I think this is something indeed a very, very welcome step initiated by the government. So in this changing time, we'll be discussing some very contemporary, different, out-of-the-box, non-traditional topics today also, which is a need of the hour. So we at ASSOCHAM are confident that this conference will give us a rounded understanding of these some very important topics which is emerging in the taxation environment. So I take this opportunity, sir, for thanking you for being there, addressing it, calling us on open house, come back to you if any problems are there. So we will definitely like to come. One struck me, I just shared with you, sir. And thank you once more for coming for this thing. And friends, thank you extremely, thank you so much. And we really look forward for very productive and interactive sessions today. Thank you, everyone.
Well, thank you, everyone. With that, we conclude this first inaugural session, and we'll now move on directly to our next session, which is a panel discussion on Section 194R. I'll request everyone to kindly remain seated because we are going to move on to our next session. I'll request the members of the press to kindly take the bites, if possible, outside the hall, because we will be beginning with our next session right away on Section 194R. Please give us a few moments to make the necessary arrangements on the dais. Thank you. Let's now begin our next session, and this session will be moderated by Mr. Hemal Zobalia, co-chair of the National Council on Direct Taxes, ASSOCHAM. He's also partner Deloitte Touche Tohmatsu India LLP. And as our panelists, we have Mr. Kamlesh Varshni, Joint Secretary, TPL1 CBDT Ministry of Finance. We have Mr. Dinesh Mittal, Vice President Taxation Group Varun Beverages Limited, and Mr. Atul Puri, who is Managing Partner and co-founder of SW India. Let's all welcome them with a round of applause. And without any further ado, I'm going to hand it over to Mr. Hemal Zobalia to take this session forward from here. Thank you.
Good morning, friends. We dive straight into the first topic of the day, which is 194R. I must promise you that we have kept some time for Q&A because I know this is the most sought after session, and we have none other than Mr. Kamlesh Varshni with us. So we put together this interesting panel where we have somebody from the revenue office, we have somebody from industry, and then somebody from profession. So first of all, let me introduce our guest. We have Kamlesh Varshni, Joint Secretary, TPL1, Ministry of Finance. I must add, friends, that he has actually received only last evening, Mr. Varshni has received an award from the Finance Ministry for his valued contribution on tax policy and Vivad Se Viskas scheme. So please give a big round of applause. It's very difficult to get him these days because he's usually wanted in most of the conferences. So thank you, sir, for this time. Maybe just present you this bouquet, please. We have Dinesh Mittal from Varun Beverages. He is Vice President, Group Taxation. So he will be happy to give his perspective on what it means from an industry. And we have Mr. Puri from SW India. He's the Managing Director and co-founder. So I thought this panel spreads across different facets and will be able to give us. Friends, 194R is just a withholding provision, right? Actually, the genesis of that, actually, if we go back, goes way back to 1964, when Section 28(4) was introduced. Because all of us know that whether any value of perquisite or benefit, monetary or otherwise, is always considered as your income. This provision, friends, is not new. Frankly, it is there in India for so many years. It has been even in overseas countries, whether you call it Australia, Canada, South Africa, all of these countries do have this provision where they seek to tax benefits which are in kind. So what is new? The new facet that we see is actually the ability for the revenue officers to go and catch hold of people who are not declaring it as income. Is it the first time? The answer is no. In the past, all of us know we did have fringe benefit tax, where there was some attempt made. There was a bit of backlash. Then the fringe benefit was withdrawn. This time, in terms of making it little more conducive from the withholding tax perspective, 194R has been introduced. And I'm sure Kamlesh sir will throw some light on the thought process behind it. When the finance minister introduced in the budget session, interestingly, the words used were that in order to tax benefits given to agents, in other words, whenever there is an event held, there is a foreign trips given to your dealers or distributors. But when we saw the provision, okay, it was quite wide. It was not limited to agents. It was all pervasive. And obviously, there were a lot of questions raised. I must say that in a very short span of time, we saw two circulars coming in, one in the June and the other one in September, earlier this month. And I always, I would compliment the ministry and the officials, because if you see, they've given a lot of examples. So it's not about just telling that this is how it will be impacted, but they've tried and made it as easier and giving examples. But as they say, some of the times the more detailed you are, it also throws up its own set of questions. So I'm not too sure that at times when we try to find a solution to a problem, the solution also starts to becoming a problem in itself. But what we have here today is where we will seek some of the clarifications or what the thought process behind those examples are from Mr. Vasne, and he will help us throw some lights. So the idea is to decipher some of the thought process behind these circulars. At the same time, also take questions from your live examples from you all. Between the panel, we'll try and cover a few live examples and practical issues that we have come across, but I'm sure there are many, many more. And just in case we fall short of time, please don't worry, as ASSOCHAM, please do write to us. We'll consolidate that and send it to sir so that he can have a look. The idea is not to miss out any questions from your end. And Mr. Vasni has also forthwith told us, please let us know whatever queries you have. So don't feel left out, but yeah, we'll try and cover as much as possible. With that brief introduction, let me start straight away with our questions. Maybe first, let me go to Mr. Vasne. We have seen two circulars, sir, and if you can tell us what has been the principles behind the examples that you have given us. Are there some scenarios? Is there any, while we know the intent behind it, is to actually get hold of recipients who are offering it not for income, or at least being subjected, whether taxable or not, but at least disclosing that. But what has been the principles as you laid out those examples? Love to have your thoughts.
Thank you. Thank you, Himalji, and thank you, ASSOCHAM. This is very interesting topic, 194R. In fact, in the previous ASSOCHAM conference also, I got an opportunity to explain a few things. And after that, we have had two circulars. So basically, first of all, let me take this opportunity to answer the question which was asked to the chief guest, So first point that was raised was about complexity. So let us try to first understand that why we have TDS provisions in the Income Tax Act, and why it's more frequently used by countries like India and less frequently by developed countries. So the usage of TDS provision is directly proportional to the level of, inversely proportional to the level of voluntary compliance in a country. So because in India the voluntary compliance is less, we need to use more TDS provisions. In developed country where voluntary compliance is more, they use less TDS provisions. But as we grow, as we have better tax compliance, which we are already witnessing, last year we witnessed, we are witnessing this year, and hope this momentum will continue. And government will always have an opportunity to revisit the TDS provisions which it has brought in the act to increase voluntary compliance. So that is the philosophy behind the TDS provision. Now, whenever you enact any law, particularly income tax law, it tends to become complicated. I mean, that is something which is very difficult to avoid. And the reason is that whenever you enact income tax law, the tax goes out from the pocket of people, and there is a natural tendency to see how that outgo can be saved. And what happens that when we frame the law, sometimes we envisage that this is what the misuse would be. So we incorporate that guardrail or safeguard in the law. So in some cases, we come to know the misuse later on, and then we try to amend the law, and then that is how the law becomes complicated. Maybe when initially the law was brought in, it was simple, but as we progress and try to plug the loopholes, it becomes complicated. And it is not unique to India, it is all over the world. In fact, if you go through Pillar 1 and Pillar 2 draft rules which they have framed, which they have advised countries to incorporate in their domestic law, you read that, you will say that our Income Tax Act is much better. And the reason is, I'm not criticizing them, not at all. In fact, I always have very high regards for their secretariat because they, combine together the knowledge of 130 countries. When we frame the law, we have only knowledge of one country. When OECD Secretariat framed the law, they have the knowledge of 130 countries participating and sharing their experience that if this law is brought in, this is how it is going to be misused. So they anticipate in advance that this is how it is going to be misused, and they try to put guardrails and checks and balances. And that is why even their first take becomes complicated to understand. And that is before you. You try to read Pillar 1 and Pillar 2 rules which they have framed, and frankly speaking, it requires multiple reading to understand what they're trying to say, and I'm not blaming them. This is how income tax law are. But then we also need to understand taxpayer perspective. We have to make them simple, if not in the legal language, but through circulars and other means. Now, that is where administration comes into the picture, and that one welcome change you must have seen in last few years is that in Income Tax Act, we have taken power to issue circular to remove difficulties. The earlier power was only under Section 119, but it has a restricted power. Under 119, you cannot interpret the act. This is first time that we have taken that journey, which is already there in Australia. Australia Tax Office, ATO, has power to interpret the law and come out with a binding circular. Ruling, they call it ruling. We don't have that kind of power, but now in a limited way, we have started taking under a particular section, not for the entire act, but under a particular section, and that power is there in 194O, 194Q, which we issued circular, and then 194S, we issued circular, 194R again. 194S is a classical example. When we were drafting 194S, which is on crypto exchange, I said this is going to be the toughest job of my career, that how do we implement this crypto taxation. But the way we discussed with the industry, interacted with them, came out with a solution. Our 194S circular under same removal of difficulty clause is considered as one of the best, with absolutely no doubt, absolutely no further questions. And everybody is on board, exchange and other people, that it is now it can be implemented very smoothly, the TDS on crypto. 194R is a complicated, not as simple as 194S, for the reasons why have we got 194R is that, for example, I am a company, I am incurring certain expenditure, and that amount is going to Mr. Himal. Now, whether it is an expenditure in my books, I am showing it as an expenditure, but whether Mr. Himal is showing it as a receipt. If he is showing as a receipt, we have no problem. There was no need for 194R. But in some cases, we saw that it was not shown as a receipt, and not in some cases, in many cases. Now, that is where 194R comes into the picture. That if I give you something, discount, it gets into your books, and therefore, that discount is not subject to 194R. We have clarified in the circular. But when I give him car, it does not enter into his books, and he uses it for his personal, pleasure. I mean, I'm just giving an example. I mean, sorry, please don't, take it otherwise. So, or if I give him gold coin, that gold coin is used for his personal benefit, not for business and profession. It does not enter his books. Now, that is the genesis of 194R. It is taxable in his hand. Either under 28.4, or they are court ruling that if it was in cash, then 28.4 does not apply, but 28 applies. I mean, nobody can deny that if I give him in some cash, we have a business dealing, B2B, I give him some cash, he has to account for in his books as receipt and pay taxes on that. If not under 28.4, under general 28 section. Now, whether that was happening or not, we know in some cases it was not happening, and that is the genesis of 194R. And once we understand this basic concept, all the questions that are going to be raised will get automatically answered. And in fact, many questions we answered in the two circular based on this logic, and I can explain once we come to those questions. But just before that, I answer the question raised by one of the participants to the chief guest, which was about that dealer conference. If expenditure is incurred in a group activity, in a dealer conference, then I have an option to not claim it as an expenditure, and then I don't have to bother about 194R penalty or anything else. Now, his question was, why not extend it to all group activities? My view, it is already extended. Read the circular properly. The first paragraph only brings about the problem. And in that problem, they write dealer conference, but when the solution is given, dealer conference is not written. So it applies to all situations. Now, that is where we need to, clear that when we say that finance minister's speech said so and so, now that was the cause which resulted into 194R, but it does not mean that the scope of 194R is restricted to the example given by finance minister in her speech. Now, that is where we need to understand that then the law, what is written in the law, becomes important. Similarly, here in the circular, if the first paragraph says that this is the problem highlighted to us, that in a dealer conference, I throw, some group activity, take them out for, entourage outside, then how do I, allocate benefit to each one of them? So we said, don't claim it as an expenditure. When we said, don't claim it as an expenditure, we did not write dealer conference. We wrote any group activity where allocation is not possible. So I think this is a very important point which you may like to notice. Thank you.
Thank you, sir. Thank you for answering that question. Sir, you made an interesting point about the power to issue circulars under 119, and now it's there in 194R2 itself. And I did notice that, in the circular number 12 of June, there are specific wordings about that, saying that these guidelines are something that is binding on the tax officer, as well as to the tax recipient. So unlike earlier where we say the circulars are binding only on the revenue and not binding on the taxpayer, here we did see a specific line. Maybe if I can invite Mr. Puri to share his thought. Do you see that, what's your view on the binding nature of this circular that sir mentioned, and also on the constitutional validity of these circulars? If you can give your thoughts.
Yeah. So I think partially Kamleshi has already addressed this, that how Indian tax authorities have the authority to issue the guidelines or the circulars. So I would just first refer to the scheme of the act. As he mentioned that there are multiple sections where the powers are given to issue the guidelines or instructions for removal of difficulties. Similarly, in case of 194R specifically, subsection 2 empowers CBDT under the approval of the central government to issue any guidelines or instructions where for the purpose of removal of difficulties. Now, thereafter there is section 194R subsection 3, which basically has to where these instructions have to be laid before the two houses for their approval, and then they become binding on both the tax authorities as well as on the person who is providing any kind of benefit or perquisite in the given circumstances. Now, with respect to the scheme of act, so 194R obviously has these powers for issuing instructions or guidelines. Then in addition to that, there is another section 298 subsection 1, which basically empowers the CBDT to issue any general instructions or guidelines, which has been there for a while now. And even in the Companies Act also, there is section 470, which basically allows the central government to issue any kind of notification or guidelines for clarification purposes. So this is with respect to the scheme of act. Now coming to the limitation to issue orders for removal of difficulty. See, if we talk about specifically about 298 and 470, the section has been worded in a way where there should not be any inconsistency with the statute itself. So what we are trying to say is that if there is any kind of departure from the statute, then it becomes against the principle. And in section 194R subsection 2, this specific phrase, not inconsistent, is missing. So does this mean that that 194R or the guidelines which are issued are basically inconsistent? So the answer to that would be negative, because basically the guidelines which are issued by the CBDT under the aegis of central government, they are basically only to give additional information or clarification. They cannot basically go ahead of the statute itself. They are basically to give clarifications on that. So even the fact that the guidelines are issued, they are basically laid before the two houses of parliament before they are basically implemented. They cannot override or enhance the scope of the statute itself. So to summarize what your question is, that basically CBDT has the powers to issue instructions or guidelines, but they are very narrow. They are narrow in the sense that it cannot enhance the scope of statute itself. It is basically to add clarification to the statute. Yeah. Thank you.
Thank you. Thank you for that input. Let me move on to Mr. Mittal. You come from FMCG sector, and we do have the Circular 12 of June, and there's a specific question 4 which deals with any rebate, discount, will not be subjected to 194R. And the whole concept being that if it's 100, you go on the counter, you get 10 rupees discount, you pay 90, it's the 194 is only qua the 90. Of course, subject to the 20,000 limit and the exclusions. But do you see any practical difficulties? Because that example or that question I know has been subject matter of discussion in this particular sector. But do you see any practical difficulties implementing in your sector?
Yeah, thanks, Himal. Good morning to everyone. And a small disclaimer, the views are my personal views and my organization may have a different view on this. And, I would start that Kamleshwar has rightly articulated the genesis behind 194R. And I see there is a conflicting clarification given in the circular, specifically in case of discount and rebate. So the word uses incentive other than discount and rebate within the bracket, and then it starts with cash or in kind, and there are few examples, TV, car, etc. is given. Now the problem is, when you are using the word cash, so I don't see any transaction where you are giving a cash discount or a cash incentive to the other party. It is not getting recorded. And once it is getting recorded, there should not be, the same should not be subject to 194R. So to my understanding, there should be a clarification regarding the cash. I understand the word cash might be used to widen the scope of this particular provision, but if there is any transaction where I am giving cash to the other party and he is not recording, it means I am also not recording the same. And if it is not getting recorded, there cannot be any 194 implication on the same. So I see personally, when we are saying cash, or if there are some other implications as per the ministry, then they should actually come out with specific examples, because, say for example, we are giving 2% discount for achieving certain threshold. Maybe, the 2 crore rupees volume discount, right? So if I'm giving that volume discount, the other party do not have any option but to record that in books of accounts. And I agree, another genesis of 194R is, one's expenditure should be the other person's income, right, sir? In principle, that is the genesis. So if I'm giving something in cash, the other party do not have any option but to record in cash. So I think that is the main issue where we feel that there is a difficulty. And believe me, sir, the moment you remove that cash word, you will see that, the other, in-kind incentives are getting reduced, and people will definitely move to the cash incentive, and they really do not want to go into 194R, and it will automatically get recorded in both the books.
Sure.
Thank you.
Do you want to add, sir, the point you raised in the
First,
beginning?
I will reciprocate that my views are also personal. Okay. Then coming to very specific query, I mean, I can clarify that when we said cash incentive, it does not mean cash incentive, because in the bracket it is written other than incentive or rebate. So absolutely no issue if you are giving cash incentive to your dealer. Now, I may have issued an invoice to my dealer that it is of 10,000 rupees, but if you pay me within 5 days or within so many days, I will give you 5% discount. So he will record it at 95,000 rupees in his books as the purchase price, and I will record it at 95,000 rupees as my sale consideration. So there is no benefit here, absolutely. That we have clarified through the help of an example. Now, always remember, there is a big challenge before us whenever we write any circular and try to give example. It is always, revenue authorities will always be reluctant to give example in a circular, because they know if they give one example, there are 10 people waiting outside to misuse that example. But still, in last, 3-4 years, you have seen that we have taken this power for issuing this clarification with the help of examples. But lot of thought goes through before we write even a single word in the circular, that whether this word should be written or some other word should be written. Because we have also, while we have to, it is our duty to make sure that we make the life simple for deductor, kind of ease of compliance, we also have to safeguard that it is not being misused by some people who only look out for how to misuse the instruction or circular issued by the CBDT. So that challenge is always before us. So what is written in the circular is very clear, that cash incentive example that you have given is definitely not a benefit. I mean, you give cash incentive to your dealer, to stockist, whatever, it is not a benefit. But why have we still written cash or kind, benefit in cash on kind other than incentive and rebate is because tomorrow if I don't write cash, somebody will say, you have done very well, I will give you a crypto. No, they will say crypto is a currency, so it is cash. and then it is not a benefit. There are people who are willing to misuse it. So we have to be very careful. The concept, we should understand that what is the concept of 194R. Once we are clear about that concept, which I discussed earlier and which Dinesh also spoke about, that what is his expenditure is a receipt of his dealer. I won't say income, receipt. I mean, income is finally calculated, but he should include it as a receipt. Because if he is using for business purpose, then he gets a deduction also. So far as if conditions of section 37 are satisfied. So that is where the concept is. So long as that concept is there, there is, there is nothing to worry. There is no benefit.
Sure. Thank you, sir. Sir, let me move on to another example where, let's say, it's not an issue of matching the books. If I read the circular 18, and as I was going through with a happy mind that it throws more clarification, I came to the last question, which was 7, which talked about that if there is a rights issue or a bonus issue by a company in which public are substantially interested, 194R is not to be deducted. And on the basis that the overall valuation remains the same, the enterprise value remains the same. Like you said, the example could be then misused, or do we then take it to imply that does this mean that a bonus or a rights issue by a company in which public are not substantially interested is subject to 194R?
So if I am sitting in your chair and a client comes to me, I will tell him that, see, when dealer conference example is given, CBDT said that it is a benefit, but I am giving you an option that you don't tax it as a benefit, you don't you will claim this expenditure in your books of accounts. So that's a relaxation provided by CBDT on specific facts, to remove difficulty. Right. Similarly, when it came to one-time settlement, CBDT said that if these entities settle have a one-time settlement of loan outstanding, then it is a benefit. It may be benefit, taxable or not, it is written, it may be. I mean, right. Depending on Supreme Court judgment in Mahindra, some cases it is taxable, some cases it is not taxable. But you may not deduct TDS because we are giving you relaxation, otherwise it would be an extra cost on you in addition to the haircut. Here again CBDT said that, removal of difficulty, I am giving you concession. So these are the two examples where CBDT is saying that I am giving you concession. But in this case, you read the question itself says that if a company in which public are substantially interested issue bonus share or right share, then whether it is a benefit, answer says, no, it is not a benefit. So how are you taking a reverse direction?
The question is then, well, the question is posed as the public is substantially, because then because the logically is that if it was, the same logic should apply even for completion. One option is that, as you said, you extend it.
Yeah, because the CBDT circular does not say that it is a benefit and I am giving you concession.
Okay. Okay.
CBDT circular is saying it is not a benefit.
Okay. So maybe while, as the sir says, his views are personal and it's a logic that we'll need to extend it further. But since you also raised about the same point about the one-time loan settlement and the benefits given to the specified lenders, okay? And therefore, again, one option is, because in this case, the question was open, okay? Yeah. And then it was, so to speak, does it mean that there the specified lenders are given? And therefore, if there is one-time settlement by a non-specified, let's say a private company, then would it be a kind of subject to 194R? Because it will get reflected in the opposite books.
So once again, yeah, absolutely. You're absolutely right, because here the question is open-ended and answer is specific, and answer is in the form of concession. So circular says that it is a benefit, but we understand that it could be an additional cost on these banks and financial institutions. So if there is a one-time loan waiver by A, B, C, D, E, F, G, then it is not benefit. That means if it is a loan, one-time settlement of loan by anybody other than this A to G, then CBDT circular will not apply. So that's clear. You are correct. You are correct in your interpretation. The question is why it is restricted to only these
Correct.
and not to others. Now, once again, now these are the issues because normally loans will be given by these entities, and we have not left out any, who are in their, business and profession. It is their job to give loan to others. So whether it is asset reconstruction company, where loan waiver will happen, or NBFCs also we have included. So we have included everybody, housing finance companies, everybody. Now, if I give a loan, so what is left out normally, where it will happen? Because if it is not my business to give loan to others, then probably I am only giving a loan to my related parties. Otherwise, it will not happen. That's a normal understanding. You take loan, if it is not related party, then you take loan only from those people whose job is to give loan. And that we have already covered. So in case of related parties, there is a strong, apprehension of misuse.
Okay.
And therefore, deliberately, that has been left out. But once again, as I said, that these are the two circulars which have been issued under 194R. These are not the only circular which have been issued. So it is not that CBDT is saying that that's the end of the matter. Whatever difficulties people face, it can be brought to CBDT. CBDT can again consider it. There is an apprehension that if we extend it to related parties, then it can be misused. If there is a genuine difficulty, people need to bring that up, and people bring out solutions that why our apprehension is not correct.
Okay. Thank you for that clarification. Friends, I'm conscious of the time that we have, and I did promise on the Q&A. Sorry, while we had questions, let me just take one more, Mr. Puri, one question is, and then we throw it open for the Q&A. One question is, do you see a practical difficulties in terms of the ability for the recipient to claim any credits? Because it may not be income in his hand. Do you see any challenges in and around that?
Yeah, see, the controversy in this case comes from section 199, read with rule 37BA, where basically the moment the tax is deposited in the form of a deduction or in the form of a payment, it becomes a constitutional right of the recipient of that credit to receive that tax. So, and if the exchequer is not able to or does not give the credit of that tax which has been deposited, that is actually a breach of Article 265 of the Constitution of India. So coming specifically to 194R, that how and when the credit, because there may be situations where certain benefits or perquisites which are provided are not taxable, or they are exempt, or the recipient of that benefit is basically not above the taxable threshold limit. So there can be various reasons why it will not be taxable. So only under these circumstances there will be a situation where there can be a question mark on recovery of that tax credit. So effectively, the tax returns, if they are filed, so what the solution is that if the tax returns are filed, then there is no reason why the tax credit should not be available to that individual or person. Similar provision is also there under section 194N of the Income Tax Act, where the TDS is deducted on the certain limit of the cash withdrawals which are made from the bank. So that is not directly related with the income.
Income itself.
In this case also, the TDS, so basically the objective is to enhance the tax net.
Right.
So if that is deducted, doesn't mean that your right to claim that credit is not there. The department definitely gives you the right to claim. File your tax return, claim the tax amount.
At least be subject to scrutiny,
Yeah,
in
absolutely.
the sense at least.
Absolutely, yeah.
Interesting.
Yeah. Thanks.
Sorry, Dinesh, if it's fine, I'll throw open. Okay, fine. Yes, let us just have Q&A. If we can have some mics. We'll have around 5 to 10 minutes. We'll take as many questions.
Hi, I'm Sumit Mangal. So I have two questions. 194R uses the word benefit of perquisite. And in the circular, we've said that I'm not supposed to check the taxability in the hand of recipient. But apparently, these same words are used in 28.4. So therefore, we are not extending the benefit of jurisprudence of 28.4 to section 194R. Because there is a lot of jurisprudence specifically on waiver of loan. As sir has rightly said, there is a Mahindra and Mahindra Supreme Court judgment which categorically says in case of waiver of loan, it's not a benefit of perquisite. But circular goes on to the extent of saying it is a benefit subject to 194R and then carve out certain exceptions out of it. So why is it that I'm not extending the benefit of the same language in the case of 28.4, and I'm saying I need to independently interpret 194? That's the first question. Second question is, again, going back to the controversy of waiver of loan. First circular refers to High Court judgment, did not talk about Supreme Court judgment, which has overruled the High Court judgment, and says, first circular says that waiver of loan could be subject to tax. Second circular brings in certain carve-outs and says in case of specified entities. And because there is a hardship. So that hardship is equally there in case of anybody who's not a specified entity. He is not able to recover his money. I'm asking that person to deduct 10% out of his own pocket, and which is also in clear violation of Supreme Court judgment in Mahindra.
Thank you. But I'll request everybody to keep it brief so that we can take. I think maybe the first question you answered.
I answered this question already. First of all, Mahindra and Mahindra judgment did not say that all waiver of loans are tax-free. I mean, that's a wrong understanding. Please read the judgment again. Okay. And number two, that 28.4 language and 194R language are different. Please read the proviso in 194R, which makes it, which extend its scope to beyond 28.4. And I've already answered that, you know, whatever benefit, whether it is taxable under 28.4, but it can be taxable under any other head of even Mahindra, you know, if not in 28.4, if I give you cash benefit, are you saying because court said that it is not covered under 28.4, that means it is not taxable? I mean, that's, that will be a very difficult proposition to accept, that if I give him benefit in cash, that it is not taxable because it is not taxable under 28.4. It is still taxable under other provisions of section 28. So, and that I have already answered, that whatever is left out of second circular is only related party transactions. So please bring it to us, what are the difficulties in relating party transaction and how you are going to, you know, address our concern about misuse.
Correct. Yeah, the next question.
Hi, this is Vaibhav.
Yeah.
Sir, two small questions. One is that you said that, let's say for any conferences and all, there's an option that, you know, you may not claim the expense. So I would like you to answer that if a company chooses that option, will it be, you know, not subjected to the assessee in default on in the TDS provisions? That is one. Second is, sir, I'm taking a FMCG example. Dinesh is there. So let's say there are distributors there of the FMCG company, and they do some expenses, you know, in the market, and the company reimburses those expenses. You know, there could be two scenarios. One could be, you know, they raise a bill, they raise a GST invoice. You basically, you know, reimburse that. That is one option. Second could be that, you know, there are people down the chain in that, in the whole scheme. So they may have further down the lane, the DBs may have further people down the lane, and, you know, they are those people whom they are supposed to, you know, have the money spent. But then because all of it finally comes to the FMCG company, because, you know, if they increase the sale, then finally it comes to the FMCG company. So if you know, you reimburse that expense of the distributor for the expenses they incur down below the chain, for those kind of expenses, is that also covered under 194, even in a scenario where it's a service, where there's a GST invoice?
So your first question is, answer is yes, he will not be held as assessee in default under section 201. That circular clearly says, because you have not claimed it as an expense. So that is clear. The second part of the question is, I think Dinesh is there. You know, let me just put it like this. There are a lot of apprehension in the mind of FMCG companies that I give a freezer, you know, I give a freezer to my dealer, you know, with my company's logo on the top, whether it is benefit or not, because he is keeping drinks out there, you know, the cans and whatever bottles and all, everything. So my answer would be, if I continue to own this freezer, which is lying in his business premises, it is not a benefit. It is still appearing in my books of account, and I am claiming a depreciation. Now, in fact, you know, I should pay him something that I'm using his space to keep my refrigerator. And that I may not pay him because I allow him that instead of, just not my company's product, he can keep other company's product also. So I will not charge him that rental payment. So that's a business dealing. That is not any benefit, But if I give him that freezer and he owns it, now that is definitely a benefit. Let us try to understand that is benefit. And if he is putting my logo, he can charge rental fees for that. So let's try to understand how the business should work. Once you understand these concepts, everything will become clear even for FMCG companies.
So, Dinesh, you want to add anything?
So just to add what sir is saying. So, Vaibhav, I agree with sir and fully concur with his views. Whenever we are giving such asset on a returnable gate pass, and which is my property, he is just using it, and after that we'll take it back. Then there should not be any implication of 194R. And we can also extend this to, you are giving some, items to the internet influencers, right? Now these days you are giving that product, and after that, if they are giving it back, 194 to my understanding will not applicable.
For circular itself.
So I'm just taking inference from that, sir. And to answer your second question, Vaibhav, on this, when they are giving some benefit or they are working to increase my sales, in fact, it is the sale of everybody in the supply chain. And if the dealer is raising a GST invoice, it means they are accepting that it is their revenue. Then there is no implication of 194R. The moment you are saying it is a reimbursement and the dealer is raising a commercial debit note, then you really need to look at the nature of the transaction. And again, the circular is clarified whether it is the liability of the distributor or it is not the liability of the distributor, which is met by the company.
Sure. Thank you. We'll take one last because we'll have sir during a coffee break, but we can take one more last question before. I don't want to eat into the next session, please. One last question.
So
if you can keep it brief. Yeah.
I understand that the circular doesn't apply on the bad debts written off. So this is if this is not applicable, then it's a big hit for the industry, as the other person is also in pain, and all the recovery and all those things have taken place, processes have taken place, and then written off happens. So apart from writing off, one has to pay 10% also. So this also needs consideration. This is number one. And the second is on this aspect of ease of doing business, which I raised earlier. We understand that the second circular says that, if it is a business conference or any conference, if the benefit is indeterminable, then, you bear it. But sir, what we want to say is that there are numerous instances in industry where this happens. So if here the ask is that if this can be extended to other things also, if the taxpayer,
But it is already extended. I replied to that.
No. It's on the conferences.
No, it is not.
He
I already replied.
that.
That was by starting address.
Yeah.
It is not for conferences. Read that circular clearly. That was my first.
No, but
that is how I started.
It's a group thing, no?
Group thing, yes.
Yeah.
Group thing is necessary because you cannot identify expense.
Yes.
You cannot identify benefit. Sorry, not expense. You cannot identify benefit in a group activity. So any group activity doesn't matter. It is not restricted to conference.
But can it be extended to others? Because there are so many.
It is already extended to others.
No. I'm not talking about the group activity. Say we take to customer or prospective customer to our factory to showcase our products.
No, once it is a group activity, see please, I have already clarified. Once it is a group activity, that concession applies.
Yeah.
The dealer example, what sir replied
Yeah,
already. Maybe we can take it over
yes,
coffee.
yeah.
That part he has already responded to. Sorry, you also had a first question before
The
that?
bad debt.
Yeah,
I will ask you. So when you write off bad debt, do you forgo your claim to recover that debt?
So in fact, coincidentally, it's an interesting because I had it in the interest of time. And we were discussing it yesterday also with sir. The point that from the waiver perspective, the issue is that, okay, you're already taking a haircut, right? From a bad debt perspective. And then you say that, okay, I waived off, let's say 1 crore and uske upar, it's penalizing. But at the same time, what tends to happen is that it's usually what people do is you will write it off in your own books itself, okay? Your legal right continues, okay? And therefore, to that extent, there is a bit of mismatch in books. I think going back to the principle or the concept that Mr. Varshney laid down, I think that is very important, or the biggest takeaway if you come back, that the concept in all the examples that has been given is there a similarity of the accounting treatment at both the ends? If there is similarity, frankly, we don't need to worry. The example of rebate or discount, okay? If there is no similarity, then you need to kind of bring that to notice, and just by deducting TDS doesn't mean it's liable to tax. You can still go ahead and claim it. So I think those are the principles that we need to bear in mind. We coincidentally just discussed, we could not discuss it today, but I'm glad you brought that question. But friends, I'm sure there are many questions. I did see some raised. Let's take it over coffee break. I must say that, like I said in my opening remarks, that we should be thankful that, that these circulars are giving examples. The apprehension, Mr. Varshney said, is when it's easy to sit on this side of the table and say, please clarify this. When you are drafting, on the other hand, you have to keep the revenue objective in mind that it should not be misused. In spite of that, I must say, like I said in my opening remarks, that the examples are quite elaborate. They have taken a lot of care to cover different scenarios. And therefore, let me thank Mr. Varshney for that. And thank you, Mr. Puri, and thank you, Mr. Mittal, for your valuable inputs. And I'm sure this session will continue over coffee break. With that, please join me in a round of applause for our panelists.
Well, thank you very much, Mr. Zubalia, and I'd also like to thank Shri Varshney, Mr. Mittal, and Mr. Puri for sharing with us those valuable insights. And like we said, it's time for a very short tea break for only 15 minutes. And also feel free to post about the event on social media. You could tag us at ASSOCHAM for India. Also, you use an event hashtag and write about the event on Twitter, on Instagram. We also have a selfie backdrop, by the way, outside, and you could feel free to take a selfie with your cup of tea. And thank you once again. In 15 minutes, we resume with our next session. Thank you.